Hello and welcome back to our series, 100 Questions We've Answered for Our Clients. Today's question is a great question. The question is, why is my workplace retirement plan, my 401k, doing differently on an investment and return perspective than the account that you guys manage for me? Well, this is a great question. It deserves a look at the nuance. Perhaps in this situation, the question was asked by a 55-year-old who's not yet retired. They've got a workplace 401k plan, and in that plan, perhaps because they have 10 years until they're retired and hopefully 35, 40 more years to live, they're taking on maybe 90% of their ownership of companies. So 90% of the portfolio is in stocks. It's diversified across the US, small size companies, medium sized companies, and international companies. But only 10% of that portfolio is in fixed income or bonds. So perhaps the market's been doing really well and they're up pretty significantly in the past couple of years because equity markets have done well. Now, if you look at the account that hypothetically we manage for them, maybe it's for a goal that's only 3 years down the road. So we've decided to take on a lot less risk in that investment portfolio. Perhaps it's in a joint investment account with a 60% mix of stocks, 40% mix of bonds, because we know that they're going to use half of those proceeds to buy a lake house or to buy a secondary home somewhere near their children. And so we need to take on less risk because we have a seen timeline that's 3 to 5 years out. So half the portfolio almost is in bonds or conservative investments. Perhaps in these last couple of years of really good stock market returns, the account's certainly up, but it's not as up as much as that retirement account. Now this makes sense. We're looking at different timelines, different risk profiles, and also just different objectives for using that money. So that often explains the difference in performance between how a workplace retirement account could be doing or the account we're managing for you. It doesn't mean that one is necessarily better than the other. Hopefully those accounts are very specifically aligned in your financial plan to helping you achieve those specific goals. It's a great question and we're always happy to answer these questions. Join us next week for another question.